I'm pleased to say that the strong momentum that we built up during last year has continued in Q1 2012. We've had a really good first quarter with nearly £1 billion dirhams of revenues, almost double the same period last year. And our consolidated net profit is 93 million dirhams, that's 22% up on last year. And this is after a further build-up of provisions of 17 million for revaluation of investment properties. But what's interesting about the results this quarter is the change in some elements of the revenue mix. There were 4 major contributors to revenues, but by far the dominant contributor this quarter was national housing. We've made excellent progress on site on all 4 projects, and that's allowed us to record over £500 million of revenues in Q1, as well as a strong contribution to profit. Now, as far as Sun and Sky is concerned, it's inevitable that revenues from this development are tailing off a bit because, of course, the majority of the handovers were completed last year. But nevertheless, we still managed to hand over 34 of the remaining units during Q1. That generated revenues of 114 million for us and a profit of 33 million dirhams. As predicted, the margin has continued to increase, a sales margin of almost 30% on these units in this quarter. Almost 1,000 units have now been handed over, and some 800 families are already living in this new community. Now, thirdly, revenues from our investment properties continue to grow. They're up 14% this quarter to almost 50 million dirhams, largely as a result of the leases that we wrote at Sun and Sky and Al Marjan in the latter part of last year and in Q1 of this year. We're on track to reach over £500 million of recurring income by 2014. And the next major contributor to that will be Al Rayana. That will be completed next quarter and will start generating revenues for us in Q3. And finally, our subsidiaries continue to perform very well. Particularly noteworthy this quarter is the almost £250 million dirhams of revenues from Pivot, our contracting company. So all in all, our business is maturing and our revenue mix is becoming more sustainable and more predictable. There were a number of milestones in Q1. Firstly, we received the building completion certificate for Boutique Alain, that's our mall in Alain, and we signed up Carrefour as the anchor tenant there. 30% of the space there is now let. At Al Rayana, we finished what we call the French Quarter. That's the 7 buildings that contain 300 or so units leased to our French government-related customer. So that's now ready for them to occupy in Q3. We've now started marketing to other potential bulk tenants. That's generated very strong interest and will, I'm sure, result in further corporate leases being written as this year progresses. And also we signed a 10-year lease with Maybury Supermarkets for the whole of the ground floor of the retail space in the clubhouse. Now, on Shams, we started handing over completed infrastructure to the relevant government authorities. In Q1, we handed over 10 kilometres of completed wastewater infrastructure. That has de-risked us from any future associated operations and maintenance costs. And perhaps most significantly, at the gate, we successfully completed the lift of the 2 largest sections of the penthouse bridge onto the top of those towers. These are the highest construction lifts for a residential development in the world. It's really a remarkable feat of engineering that has really changed the skyline on Shams. We have 1.5 billion of cash on the balance sheet as at the end of the quarter. Cash collections were strong this quarter, over 450 million dirhams, which allowed us to continue to invest in our projects, spending almost 700 million on work in progress, particularly at the Gate, Al Rayana and our national housing projects. Well, as you know, during the quarter, Sorouh and Al Dar announced that talks had commenced to identify whether a merger of the 2 companies would be in the best interests of shareholders. The evaluation of potential benefits is progressing, and we'll give you more details as and when it's appropriate. From both a financial and development perspective, it's been a strong quarter for Sorouh, and we can look to the rest of the year with a good degree of confidence. The business is now well underpinned by quality earnings from national housing projects and also recurring income from our investment property portfolio. And also we're well positioned to deliver an exciting project pipeline of some 7,000 units between now and the end of 2013. The first major delivery on that is at Al Rayana, which will be completed this quarter and will start generating revenues in Q3 this year. This will be followed by the Gate towards the end of this year and then Al Ghadir in 2013. And this increase in unit handovers will further increase the quality of earnings and generate significant value for our shareholders.